Good morning friends. Sharekhan has become a teenager from today and it has completed 12 years of operations. Remember in 2000 on the same day Sharekhan was started and it has done so very well over the past 12 years. Despite the most difficult times in the market, Sharekhan has managed to demonstrate extremely good performance over the years, mainly because of the support and encouragement from each and every one of you, and we would like to thank you for this support, and we hope that in future also you would continue to support us. Friends, talking about the global markets, US markets were down about 0.3% as we had some weakness in the European markets, mainly emanating from the political uncertainty in Italy and Spain, and there are fears that this could aggravate the issue to the entire Eurozone, and because of that we had seen sharp cuts across European markets of about 1 to 1.3%. When we look at the Asian markets, we have a mixed picture as we had some positive data coming out from China where the export growth for the month was 25%, import growth was about 29%, and China reported extremely good surplus of almost about $29 billion, which actually was much better than the market expectations. At the same time, the Japan is showing sharp cuts of almost about 1 to 1.25%. As some of the companies reported extremely disappointing set of numbers, particularly Sony, which reported losses for the second consecutive quarter versus the expectations of profit, and because of that the technology space had seen a lot of weakness in Japan. Also, importantly, Japan reported a much higher current account deficit of 264 billion yen against the expectations of about 148 billion yen. So we are seeing some weakness in the Japanese markets. The rest of the Asian markets are quite quiet at this point of time, no major movement. Talking about the flows, we had FIs pumping in almost about 800 odd crore in the cash market, and the domestic institutions were sellers to the tune of about 949 odd crore, and even in the futures, index futures, the FIs were sellers to the tune of 118 crore. Back home, our market registered a sixth consecutive session of weakness, and we closed below 5950, which is an extremely important level both from a derivative data point of view as well as technically, and we are seeing a slow grind towards the lower level, which is quite unnerving, and the advanced decline and the breadth of the market is also not showing any kind of a meaningful turn around. Only hope that probably the market is working with is that now that the NTPC divestment part is over, where the government has been able to mobilize almost about 11,500 crore, the relentless selling which has been continued by the domestic mutual funds could come to an end, and we could see some kind of a pre-budget rally, but the timing of that is something that we will have to watch out for. On that note, let me invite Shaival to take us through important F&O data, strategies and ideas that we could have in the F&O markets.
Good morning friends. We have been seeing that the markets have been very choppy and has been trading, say, broadly in a range of 50 to 60 points, and we have been seeing that yes, while the market has been trading in this choppy range, there's some selling pressure which has been witnessed in the market. Now we have seen that the PCR ratio started the series with 0.90, and now that has been increased and has gradually increased and is currently at 0.97. Now talking about the activity on the futures front, we have seen some marginal long positions being accumulated in the market in Nifty futures. The volatility index VIX continues to see an uptick, and we have seen that it has increased by more than 4%. On the strike front, the activity remains unchanged. 6,000, 6,100 and 200 call option continues to add a good amount of open interest, whereas on the lower side 5,900, 800 and 700 put continues to add an open interest. Friends, as our weekly VWAP is 6085 and we have been trading below that, our bias for the market is negative. We have given 6,000 and 5950 as the lower range, out of which the first range of 6,000 has been achieved, and we are close towards the 5950 range. Our bias for the market is negative, but yes, we may see some sharp bounces in the market, and level of 6,000 on closing basis would continue to act as a hurdle for the market. Talking about the stocks, friends, from intraday perspective, Maruti is looking good. One can go long with stop loss of 1600.40. IFCI is looking weak. One can go short with stop loss of 34.85, and India Bull Real Estate is also looking weak. One can go short with stop loss of 76.75. Thank you.
Here are the important news and events that we are tracking today. Aurobindo Pharma came out with extremely good set of numbers both at the top line level and the bottom line level. The net profit was up to about 91.8 crore versus 28.5 crore last year, and the top line grew at about 23% to about 1552 versus expectations of 1263 crores. So overall, the numbers and the turnaround story for Aurobindo Pharma is progressing very well. Cognizant announced numbers yesterday wherein the YOY growth was at about 17%, and there was also a quarter-on-quarter revenue growth of about 3%, which could have some positive rub-off on some of the technology stocks like TCS and Infosys. So watch out for some positive action in these two stocks in today's market. After the successful completion of the NTPC divestment, wherein the government mobilized about 11,500 crore at a price of about 145.25 or thereabouts, the government has lined up the divestment plan for the next few months, wherein NALCO would be the next candidate where the divestment could happen in March, and subsequently followed by MMTC, Neyveli Lignite, SAIL, and so on and so forth. So overall, the progress of the divestment plan is really doing well, and as against the 30,000 crore target that the government had set, they have already mobilized about 21,500 crore, which is 73% of the target, which is sentimentally positive. In negative news, the India's GDP growth for FY13 has been pegged at about 5% now versus the expectations of about 6.2% earlier, which is definitely a bit of a negative. And India Bull Financial Services is going to do a block deal today to mobilize up to about 448 crore. And the range that they are looking at is about 283.5 to about 298.5. Which would be at about 5% discount to the previous closing price. Two companies will be announcing numbers today. Mahindra, we are looking at a net profit of about 844 crores. So the top line growth that we are looking at is about 30%, and the similar kind of a bottom line growth. And in case of Hindalco, we are looking at a net profit of about 397 crore. SBI, some positive news as the company has decided to shut down some of the rural processing centers in favor of the local branch managers who have a better understanding of the rural market. So some positive implications could happen in SBI. One can go long with a stop loss of 2281 and a target of about 2397 to about 2441. Aditya Birla Retail, which is a retail arm of Aditya Birla Group, is looking at rolling out almost about 100 supermarkets under the brand name More over the next 3 years to bolster its retail presence. So some positive news for Aditya Birla. One can go long there with a stop loss of 1051 and a target of about 1104 to about 1124. Some positive news for Arvind as it has entered into a long-term tie-up with an internationally known brand Iconic Lifestyle to manufacture and distribute its brand Ed Hardy in India. So one can go long on Arvind with a stop loss of 87 and a target of about 92 to about 93. Some negative news for Ramke Infra as the income tax department has conducted a raid at its offices. So one can go short on Ramke with a stop loss of 90.25 and a target of about 85.75 to about 84. That's it from all of us, friends. Have a great weekend and see you on Monday morning.